Hello members, it's Mike Bell here from the Armchair Trading Floor, just doing the weekly analysis for the week commencing 26th of February 2018. Now, what I'm going to do is I'm just going to go through a few different pairs that we're going to be looking to watch onto the coming week, and we're just going to explain some of our analysis and what we're looking for in the short term, medium term and long term as well. Now, if I start here on GBPUSD, which is the pound dollar, you would have noticed, well, a lot of you previous members or existing members, sorry, will have noticed that we've been on this pair from the decline of, since the reversal point since the start of 2017, just riding this one all the way up from its lows of 118 all the way up, and the GBP pair has been doing quite well on this bullish trend, heading up to what I see as definitely 142 in sight in the next coming weeks, and also ultimately heading up to around 155 or 150 towards the back end of 2018. Now, if I wanted to go down and just explain this pair, what I'm looking at is I'm going to just quickly go to the 4-hour. We can see here that we had a new high created towards the back end of January. Now we're retracing all the way back down to this historically bullish trend line that I'm just waving across right here. Now what we've got is we've had 1.38 form itself as a new key level. For all of you existing members, you'll know that we put our key levels as the horizontal ray by using the drawing tool on a trading view. There we go. So that's how we draw on our horizontal rays. So we highlight those key levels by using the horizontal rays like that in the red. So now we can see that this is forming a new key level 1.308, where price is beginning to respect this as a new formed support. So we've got this zone of 1.38 to 1.3820 as a level of support. So what I expect for GBPUSD towards the start of the week is to actually break underneath and head back down to retest the 1.38 level, and then we should see price just compress, bouncing up, down, getting rejected off this counter trend line, and then eventually after a few times testing the support level of 1.38, we're actually expecting a breakout off the counter trend line that we're waving right here, just to go back up to all-time highs. Now this ties in with some of the analysis that we are foreseeing in the next coming weeks, and that's mainly because of the dollar weakness. Now for our existing members, you would have noticed that we've been calling the dollar weakness for quite some time. It's quite obvious on the pair on the USDJPY as well. But what we've actually got here, and this is quite common with GBPUSD when it actually is on an uptrend, what we've got here is we've actually got a bullish pennant forming. So we've got flag, got the pole, and then what we've got is this triangle formation right there, bullish pennant. That's what we got. So we're expecting highs just to actually exceed and go up once we've actually got this breakout. Now this makes perfect sense that we're getting up to this range just by the length of this target up here, and the reason for that is if I zoom this out on a daily time frame, what we can actually take a look at, let me just zoom this out for you, what we actually can take a look at is we've been working this inner trend line, this inner trend line right here, and we've actually broken above that inner trend line, which is 1.35. This is what sent price surging a good 1,000 pips up higher. Well, sorry, 800 pips up higher to obviously get to the levels that we are at now. And obviously prices pulled back. But if you look at GBPUSD on a daily time frame, you can see that we're actually seeing this trend line, this bearish trend line form from our $2 highs back in 2007. As we moved to 2015, we had 1.70. We had some rejection there, and then obviously Brexit happened, which just sent price tumbling down to the lows. But we are heading up to the zone where we should be seeing another retest of this bearish trend line right here. So it's going to be a definite break or bounce situation. We're expecting that we should hopefully see a break off that 1.50 and then retest to hopefully exceed price up to the 1.55, 1.56 towards the back end of the year. But this is definitely going to tie in with the dollar weakness over the next few months and also over the next 2 or 3 years as well. So that's what we see for GBPUSD. We're going to be looking at how price reacts on the 4-hour chart and on the hourly chart. But what we're going to be waiting for is we're going to wait for a break of this moving average to the south side. We can see that we closed bearish on the 23rd on last week's close. We closed on a 4-hour bearish candle. So what we'll be looking for is price just to go underneath this moving average, and then also we'll be looking for a retest of this zone, and then we'll be looking to take shorts down to 1.38 for GBP USD. So our risk reward is going to be, we'll be looking at taking positions once we break to the south side of 1.3950, and our stops just above there we go, and stops just above 1.40 and then targets at 1.38. Our other confirmation for this is going to be, we've got a minor trend line right there, so we'll just be hoping for the break, retest and continuation to the south side as well. Let me just see where this lies on the fib. There we are. We've got a nice reversal here on the 50% fib. So we should really be seeing targets of 1.3786, which is the extension target, the minus 27 extension target there. And hopefully we'll just see price bounce around this level until head back up to the 1.34, and then we can hopefully look to break this trend line. But for the near term, that's what we're going to be looking at for GBP USD. Got a nice 2.27 risk reward, so it's still a decent trade, but we definitely need to see a break of this counter trend line. We definitely need to see a break of this counter trend line first. So break, retest off this MA or around this level, and then we'll be going short, so we'll be selling this pair. So hopefully nice 143 pip reward for that trade. The next one that we'll be going into is USDCAD. Now we got caught out on USDCAD last week because this 1.25 the 1.26 level was quite crucial for us. We managed to actually break above it, which we didn't expect. However, we did see that there was going to be, well, we did know that there was going to be some bearish continuation for USDCAD. But what we'll be looking for is we've got this zone here of resistance. This pair was definitely overbought, which sent us up to our key level. So we've got, again, these in our horizontal rays. So these just stay on our charts, and we've been monitoring this key level for a while. You can see here, if we zoom this in on the hourly chart, we actually had a spike up into that key level and a rejection, and then price is sitting around this resistance zone right here. So in terms of USDCAD, what we'll be looking for on this pair is we're going to be looking for, we've got high lows being created here for the short term on the 1-hour chart. But what we want to see is we want to see a break off this trend line. Now, there's going to be two scenarios. Even though we are confirming that we are going to be going short on this pair, we'll either get a break of this trend line, a retest at around the 1.2642 level after a few days of consolidation, and then we'll be going straight back down to our 1.24, or we'll see a bounce of this trend line, but then another spike up into the weekly resistance that we've got highlighted right here, and then we'll actually be taking a short. For me, what I'm going to be waiting for, I would prefer this trade over here rather than this trade, just for the simple fact of the risk reward, but we'll definitely be shorting this trade back down to the 1.24 level in the near future. Going into USDJPY, the main one, we've been calling this for weeks actually. We've been calling the dollar weakness for quite some time, even back when the USDJPY was at this key level 1.1320. Some of you members that are obviously with us for a while have obviously seen this trade, been involved in this trade all the way down. And what we're going to be looking for is, again, very similarly, we're going to be looking at an ABCD move on the fib. So we've got this on the short play. We can look to hopefully sell this trade pretty much on the open, but it depends on where price is going to gap up to. If we look over here on the right hand side, we can actually see that we closed at 106.83 on Friday night, but we're actually potentially opening at around 107.20, so we can potentially hopefully see a nice spike up into this key level of resistance 102.7 up to 107.46 to hopefully execute our short straight away. We had another confirmation of this short because we had a retracement at the 50% fib, and then we'll be taking this one all the way down to target at 104. There is definitely some more juice left in the tank. I'm seeing actually 103, and potentially, yeah, I'm seeing 103. I don't quite see that in the near future, but I'm potentially seeing 103. But we'll be definitely taking shorts down pretty much on the open to 104. So nice risk reward. We've got a 66 pip risk for a 317 pip reward. USDJPY is on a definite aggressive downtrend. Looks a pretty good trade. Again, we've got this trend line, this bearish trend line, and we've got this counter trend line from when price has pulled back up. It makes sense that price is obviously doing what it's doing, and we should hopefully see a gap up to about this level, a rejection of our horizontal ray, which is our key level that we're waving across right here, before further downside into our target zone. So we definitely want to be taking sells around 107.38. Decent risk reward for this pair. Stops just a little bit higher than last week's previous high. So our stops are just going to be at 108.023. But yeah, seems a good trade to take as well. And the final one that we're going to be looking for is the trade that we did just before close of play last week. So Euro New Zealand dollar. Took this trade, and we've actually took this trade from apologies for the delay, just waiting for this chart to load. Yeah, we took this trade all the way up from 106.8.20. So very quick in and out on this long. We are going to be targeting 1068. Bear me 2 seconds. We are going to be looking for shorts on Euro New Zealand dollar going into next week. We will be taking a look at taking a short if we cross under this moving average. We're going to be simply taking a short down to this level of support, which is 107.50. So it's simple, quite a simple 100 pips. Let's see how the market opens. For me, ideally, I want to see another retest of this level here, the 106.9 level, before taking an entry. So we're going to be waiting to see if we can get into this zone with price some point in the week before looking at taking further shorts, because we could see this we could see this moving average acting as a level of support. So we need to see what happens with price. If we get the crossover, then we'll take the short on the open, or if we actually get price moving up and another spike up into this resistance zone right here. Another New Zealand pair that we're obviously going to be looking at is Aussie New Zealand dollar. Apology, I got myself mixed up on the last one. Yeah, we took the long last time on this touch, so we actually took the long towards the close of play at a few hours before close of play, with our stop loss at 107.08. Sorry, 107.03. With our target at 107.70. Price did quite well. We closed at 107.51. We got up to 107.54. There's still definitely some left in the tank, so we're hoping on open we'll quickly grab that extra 20 pips. But hopefully what we want to be doing on this pair is actually, once we reach this level of 107.70, we're going to wait to see if we can get new signs of reversals, because we can hopefully expect that we will see some exhaustion on this pair, and the Aussie pairs will be going down for next week. So this is definitely a key rejection zone right here for Aussie New Zealand dollar. We should be looking at taking shorts back down to create new lows of around 106.20. So let's see how this trade pans out. We should be hoping for a move like this. As this price actually, there we go. So we can complete quick 50 pips from last week, and then hopefully we can enter into a nice, solid, decent trade, because the Aussie New Zealand dollar is definitely weak and on a long-term basis. But we can hopefully do a decent risk reward of 25 pips for 150 pips target as well. So we should be looking at entries around 108. Hopefully we'll get a nice manipulative spike up, and then we'll actually get a level of well, a nice target level of 106 for the long term. We've literally just hit the open, and let's see how these pairs pan out. For USDJPY, we'll just have a look to see if we've actually gapped up. Yep. If I take a look here, gap up just as expected, right on the open. So we gapped up a good solid 30 pips. So we are heading up to this level. Hopefully we can get a nice short around the 107.46 level as well. Thank you very much for your time, everybody, and good luck on this trading week, and we'll speak to you soon.